Today we stand in front of City Hall. We're surrounded not just by tents, but by frustration. We're surrounded by frustration that is caused by a 14% unemployment rate. We are surrounded by a frustration that is caused by a foreclosure crisis that is taking tens of thousands of families out of their homes. We are surrounded by a frustration of 300,000 people in our midst, adults who do not have a bank account and suffer the consequences of being ripped off by payday lending and cash checking institutions, where they have to pay $700 a year for simple banking transactions that most of us pay nothing for. We are surrounded by frustration not only in City Hall, but throughout the nation that is feeling this. This is not about a council member. This is not about the City Council. This is about a frustrated United States of America, because we feel that banks should be more responsible. That message and that frustration is not stimulated just because of a recent Occupy movement. That has been the groundswell of feeling throughout the nation for 3 years and going. We don't see a light at the end of the tunnel. We have to readjust how we've conducted our business. And in the case of Los Angeles, where we transact billions of dollars in transactions every single year, we need to hold those people responsible who make those transactions to ensure that they are giving back to this community for the millions of dollars in profits that they are reaping from those transactions. Let's be very clear. This is not the city of Los Angeles' money. This is not politicians' money. This is the people's money.
That's right.
And we have a responsibility, just as an accountant has a responsibility to do your taxes right, we have a responsibility to spend that money correctly with a fiduciary responsibility to get our taxpayers the best benefits that they can get out of that transaction. And I believe we can do far better than we've been doing in Los Angeles. I believe that banks and other financial institutions can provide more philanthropy throughout our city. I believe that banks and financial institutions can provide more loans to our small business community. I believe that our banking institutions and financial institutions can provide better home loans to securitize families, not disrupt them. I believe that our banking and financial institutions can invest in neighborhoods that have been disenfranchised from investment for years and years and years, and I believe these same institutions can provide ATMs and branch services that are not now being provided. And I believe they shouldn't be investing in those same payday lending institutions and check cashing institutions who are ripping off the community with exorbitant interest rates. That's what this is about. I believe it is absolutely the city's fiduciary responsibility to ensure that when we transact billions of dollars in transactions, that we have to require the person that is benefiting from that to do more for our neighborhood. And that's what this is all about. What do we propose? It's very simple, really. The Banking Responsibility Ordinance merely creates a scorecard. It shines a bright light on what these institutions are doing to reinvest in Los Angeles. It creates a mini Community Reinvestment Act, so that we're not totally reliant on the federal government's Reinvestment Act, but are relying on our own Reinvestment Act, because we should be judging the financial institutions on how well they're doing in our community, not Washington, D.C. Right? So today we are going into the Budget and Finance Committee to ask them to support an ordinance that will shine a bright light on the process, that will provide a greater opportunity for the city of Los Angeles to extract more investment into our neighborhoods that need it the most, and to ensure that we understand that when somebody is transacting business, they're not with the left hand ripping us off by bid rigging or other inappropriate transactions such as the foreclosure crisis. Are they providing modified loans Are they doing principal reduction? Well, we believe they should, and they're not doing it enough. So cities across the nation need to create these ordinances to use as leverage against the banks and other financial institutions to do things the right way. We don't want them ripping people off. We want them reinvesting so that those people can then place their benefits back into those institutions and recycle the process. We believe banks will be the biggest benefactors of the banking responsibility ordinance. Not only will they avoid prosecutions when their players act wrong, but they will get reinvestment from the community who will reinvest in them for being good players in the process. This is not about excluding banks and financial institutions from the process. Many have said that we're doing this to rid the city of Los Angeles from specific banking institutions. Nothing could be further from the truth. The truth is we need these institutions to invest in our community. And what we want to do is create a scheme where they are competing to provide better services, not lesser services, more profitable. We want them to have more business and give back the benefits of that business to the people of Los Angeles. That's what this ordinance is all about. Let's not confuse matters. It is not too expensive for us to invest in the banking responsibility ordinance. It is too expensive for us not to do the banking responsibility ordinance because they'll continue to rip us off if we allow them to. This is not an extreme measure. This is being reviewed throughout the nation. I just came back from New York City, where jurisdictions from all over the country are considering banking responsibility ordinances. New York City has a majority votes ready to pass this on to the mayor. Boston is considering the same kind of ordinance. Cleveland initiated this 20 years ago, and they've created $10 billion of new reinvestment into their community that compares to no other city because it has expedited the reinvestment in their community. Every community should design banking responsibility ordinances that create the best investment for their community. That's why it's important for us to create one in Los Angeles, because those who create these ordinances will have greater leverage over the financial institutions to be able to stimulate that reinvestment. If we do not do this, somebody else will, and they will get that reinvestment. Los Angeles will lose that again. That's why this is so important. I do want to say that I am absolutely encouraged by the CAO's report, because in the report, the CAO said we should do a banking responsibility ordinance. We differ on the numbers, on how to do it, how to investigate their performance. But we should all agree that the banking responsibility ordinance would increase our fiduciary responsibility to the people of Los Angeles. And that fiduciary responsibility is not just about where we deposit money. It's about, if we deposit that money, will that bank give more back to our community? Will they reinvest that deposit in building new homes and creating home ownership and creating employment in our community? Is that what it's all about? That's what this ordinance is all about. So with that, I want to thank all the organizations that are represented here today. I want to thank all the organizations that come together to realize that America can do better, but only if we get control of the financial institutions that have had their field day over the last several years in ripping us off. All the projections are that if nothing changes right now, there will continue to be a foreclosure crisis that is unforeseen in terms of when it would end. We have to change this. I believe that Los Angeles is $30 billion in assets. Will send a loud message not only for the people of Los Angeles, but to the nation, that there is a way to do it better. And this banking responsibility is one of those steps. Thank you.